In January of 2023, I have now invested over $35,000 in this one dividend stock called Taiwan Semiconductor that produces over 50% of the semiconductor chips we use in all of our technology. It is now the largest single stock investment I have ever made in my investing career, and I want to break down the decisions that have made me decide to do this. Then we're going to analyze my $420,000 dividend stock portfolio, break down the individual positions to see how they've been performing through 2023, and then finally we'll take a broad view of the markets to see where we currently sit. If that's a conversation you'd appreciate, in return I simply ask that you hit that like button, folks. But getting into this, Taiwan Semiconductor made the largest single investment into a US manufacturing facility out of any other company we've ever seen, worth $40 billion. But what was most intriguing about this was on the announcement, we saw the likes of Apple CEO Tim Cook show up. We saw the president, Joe Biden, and even the CEO of Nvidia. Not even Tesla or Elon Musk can garner that kind of political attention, and it really leads to the intriguing question of why. We also saw that the US has barred the Dutch supplier that is ASML from selling chip making gear to China. ASML is the GOAT behind the semiconductor industry. They produce the machines that actually make the chips that Taiwan Semiconductor buys. But that's just the tip of the iceberg. Biden also stated that if China decides to invade Taiwan, that they would use force to help defend them, something they didn't even state for the invasion in Ukraine. And again, this leads to a very intriguing question. Why? Why is there so much damn attention around this company? Last year, even Nancy Pelosi took the time to go visit the Taiwan Semiconductor facility, which caused a lot of political tension. There is an underground war going on right now for chip manufacturing, whether it is putting a rover on Mars, launching rockets, or making your toast in the damn morning. Do you remember what happened when we couldn't get chips through the pandemic period? I mean, the entire auto market went through the roof because they couldn't produce enough new vehicles. We saw supply constraints across the board. This is the new oil and nobody is discussing it. But the fact is the Ukraine was like the bellwether for China looking to invade Taiwan, and they realized, I don't think they can do it, because if they did, the political tension that would cause, it could cut off all their global supply chains, considering how much export they do to the US. This is literally an underground war going on right now, and tons of people keep asking me, why don't I just buy the semiconductor ETF? Wouldn't it be safer? And I'm going to tell you right now, it's not. Taking a look at one of these ETFs, guys, TSM sits at the largest position in all the semiconductor ETFs, but the problem is TSM sells to every major chip manufacturer. They enable the most advanced chips for Nvidia, Broadcom, Texas Instrument, Dammit, Intel, Qualcomm, you name it, they have some kind of connection with Taiwan Semiconductors. In fact, if ASML or Taiwan Semiconductors went under tomorrow, the entire world would fall apart with the reliance we have on these companies, with the moats that they currently have. And with the recent investment from Berkshire Hathaway, it leads to this intriguing thought of why are no institutions investing in this company? It is the largest foreign publicly traded company at over $400 billion in the market cap, yet there's only 17% institutional ownership. To put that in comparison, Apple garnishes over 61% of its entire outstanding shares held by institutions. That's the same with Amazon and most of the largest S&P 500 companies. And this doesn't even begin to touch on the valuation metrics of TSM. This company has been growing diluted EPS at 18% year over year for the last 5 years. There is expectation that may slow down this year, but at a PE ratio of 15, I think there's a lot of bleed room, a margin of safety, as Warren Buffett would like to call it. From the balance sheet perspective, this company is currently sitting on enough cash to cover their current liabilities and then some. This is one of the cleanest balance sheets you will ever see outside of the S&P 500 top 10 companies. The last 4 quarters, they have beat all the analyst earnings expectations. And if you are a dividend focused investor, kind of like myself, if you take a look at the payout ratio, sits at under 30%, and the dividend has been a growth beast. I think they went from annual dividends to quarterly payments, growing it dramatically over the pretty much doubling it every 5 years as well, which is just staggering. And this is what has led me to make the decision to invest 35,000 Canadian dollars into Taiwan Semiconductors at the average cost currently of $80 a share for my portfolio. It is a cash flowing asset that has great appreciation over time and checks everything from ESG compliance. Their factories are heavily reliant on water and they reuse over 90% of that water. This is a very great company for a sovereign wealth fund or institutions at the likes of Berkshire Hathaway. But now let's step back, take the broad overview of my just under $420,000 stock portfolio, and then we'll analyze the individual positions to see how they've been performing through 2023. But I want to reiterate the importance of having absolutely zero debt right now and having stabilized income to cost average into this suppressed market, as I still think we're on a rocket ship, a technological revolution between every sector in the market, whether it's blockchain taking over financials, whether it's AI, genomic editing here when we're talking about healthcare, the cure to cancer in our lifetime, the utility sector, the auto sector. Everything is going through a once in a lifetime generational jump. Even McDonald's is automating, Walmart self-checkout. All of this stuff is leading to higher margins in the market. And I think once we get over this hiccup, the market is still going to offer above average returns. And I don't care how depressive the entire news media is right now, I will be buying aggressively through this entire year, as I think this is the year we will become millionaires. So taking a look at the portfolio, VDY currently makes up 36.4%, being the Vanguard Canadian High Dividend Yield ETF. We've got VOO, the S&P 500 ETF, at 28.7%. We have SCHD, the Schwab US Dividend Equity ETF, at 18.6%. TSM now making up 8.4%, and cash sitting at 7.3%, with some smaller cap stock investments making up about 1%. I achieved a massive goal at the beginning of 2023 by getting my dividend income over $1,000 a month, which is an incredible goal as a passive income investor, because it's all primarily coming off ETFs, which I know I could spend this money tomorrow, I could reinvest it, and it wouldn't hinder the long-term growth of these individual positions. So that way I'm not hindering the retirement, but I have access to cash flow as part of an emergency fund, or again, reinvestable cash, with most of that coming from VDY being over a 4% monthly paying ETF. We got VOO at 16%, SCHD 21%, TSM at 5.7% of that cash flow, and then 2% coming from my high interest savings account on my cash. You'll notice my cash position has built up pretty nicely to about $30,000. This comes from just working really hard. And some of the businesses and things I've been working on at the beginning of the year include this spreadsheet you see here. So if you want to support the channel, come on over to Portfolio Tracker, bring all of your accounts into one place and track your dividend income. You buy one of them, you get them all for free, including any new products that we launch. It's currently only $12.99. These products on other platforms sell for over $100. If you use the coupon dividends, you'll get 30% off that price as well for supporting the early build out and us just kind of patching the product. All the details and the links are in the description. But let's take a look at the best performers of the year and see how things have been going. Kicking it off with the best of the bunch, Taiwan Semiconductors up 22.63%. I said I was going to wait for this to pull back before I started buying more of it, but honestly, when I analyze it, as Warren Buffett says, sometimes it's better to pay a fair price for a good company than a discounted price for a crap company. And even at $90 a share, I still think this is a buying opportunity. So I said, forget it. I bought more, and that brought my cost average up from $75 to $80 a share. But this one has just been on another tear at the beginning of this year. And second in line, surprisingly enough, VDY, even though over the last year it has been kind of hovering flat, year to date it's jumped up 5.39%. So this has been probably one of the best dividend stocks I've invested in, though a lot of the dividend companies I sold to buy these kind of ETFs, like my REITs, which I used Ryokan to buy some TSM. I put the rest of it into VDY, but Ryokan has been crushing it as well. A lot of growth coming out across the entire markets. I mean, it doesn't matter if you're investing in Alibaba, the US, the Chinese markets, there's a lot of good growth coming out of them. And I think that's just because maybe institutions have been sitting on like 10, 20-year record high cash levels that they said, hey, you know, things have dropped enough. Maybe it's time to start buying more stock. Who knows? But the S&P 500 coming third in line, up 3.36%, my VOO position. We got a Duro Clean Technologies that is going to be turning waste plastics into fuels, completely changing the incentive structure behind how we recycle, is 90% of recycled plastics don't actually get recycled. This one is up 2.2% at the beginning of this year. And then SCHD, even though the 5-year performance has been stellar, it's been proving very stable through this recessionary environment. Year to date, however, it's just relatively flat. But again, if we can just stay flat and collect the dividend, I'm by no means complaining. But taking a broad view of the market comes back to that point. It's kind of weird how the rising tide raises all ships, because again, it doesn't matter what you're investing in right now. I think the prudence of just investing in this recessionary environment will show you times like this where no matter how negative the rhetoric is coming out of the news media, these stocks can still rally. And I think even on bad earnings, you remember when good earnings were bad earnings and bad earnings were really bad earnings? I think we're going to be shifting into an environment where even bad earnings probably will be good earnings, and we'll see the exact opposite as the spring has been winding back in a lot of these companies. Obviously, there will be some exceptions. Some of these companies might not do that well, but that comes to the point of building out a nice diversified portfolio and not over leveraging too much into any individual investment. But at this point, I'm going to be continuing the conversation, doing more in-depth personal finance about my life and things I will never talk about on this channel over at my Patreon. For those of you that want to support my growth and learn a lot more about what's going on in the market from my perspective, consider supporting there as well. $5 a month, less than a Starbucks coffee. I think there's some incredible value, but I want to know what you're buying. What do you think about the market? Do you think I'm an idiot buying Taiwan Semiconductors here? I'd love to hear about all of it in that comment section below.